What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is April 1st, first of the month, team. Let's talk about today's price action. We'll talk about my trades for today, and I actually did do trades today. Before we do that, quick risk disclaimer: nothing in the video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. Happy Friday, everyone. Let's take a look at these box scores, and we'll talk about what was really odd about today's session. All right, S&P 500 finished up 0.28%. Amazing bounce off of yesterday's 1.5% loss. NASDAQ QQQ down 0.19%, the relative laggard today. IWM small caps are pretty strong, up 1.12%. The Dow Jones was up 0.34%, and the ARK Innovation ETF was up 1.89%. You can see pretty much everything closed towards the upper end of its day's range. The ARK Innovation ETF, oddly enough, was the best performer, but closed only halfway through its daily range. Volatility got crushed today, and this was the one tell for me that even though we were red intraday, hey, there's a high likelihood that the market could head higher, because the VIX was red even while the market was also red. And then our breadth was positive. We had 67% advancers in the IWM, not overwhelmingly positive, but enough to get the job done. My trend model is still at a -1 reading. So with the -1 reading, I want to make sure that I'm sticking with my process. I don't go too crazy on long positions, and I at least have some sort of hedges on the books. All right, let's take a look at our Finviz heat map. Apple pulled back for, I believe, a second straight day, but this is barely even a pullback. Just finished down 0.17%, really just a consolidation. The one noteworthy spot that was just super weak was the semiconductors. Semiconductors got absolutely rocked, and maybe, perhaps, it is the market starting to price in, hey, maybe the semiconductor shortage is starting to come to an end. Because this sector, it has rallied for about 2 years consecutively now. So even though the semiconductors companies might be fantastic, once you rally for 2 years, that shortage ends, maybe you give some back. Other than that, pretty good across the board. You can see the financials were also an area of relative weakness. Let's take a look. Oh yeah, and then the transports as well. We can't forget the railroads. They absolutely got lit up today with red. Sectors, best performing sector. We had the ARK Innovation ETF, KWEB. The China internet names were up 5.96% off of some news that the Chinese government may allow the US more control over auditing these Chinese companies that are listed in the United States, or access to their audits, something of that nature. You can see the ARK Genomics Fund was up 4.57%, and biotech was also pretty strong today. Where is biotech? Yeah, it was up 3.76%. So this was one of the caveats that I noticed today. Hey, the market yesterday had a bad day, right? And then today, intraday was also at certain points pretty red. But it was, hey, the VIX is not moving higher. It's actually moving lower. And then we're seeing relative strength in the small caps, in biotech, in cryptocurrencies. We'll have to take a look at those, which are our more risk-on areas of the market. So under the hood, it looked more bullish than bearish, interestingly enough. Style factors, we had our high div, low vol style factor up 1.06%. Wow, that was our best performer at the end of the day. These kept kind of jumping around back and forth. A very choppy day today. We had international value up 0.94%. High beta was pretty much flat, only up 0.01%. So definitely kind of like a mixed picture with these style factors. All right, put hate, I would say this is kind of done because we did have a spike in the put to call ratio yesterday. Seasonality heading into April. Hey, today was the first day of April, and there's several ways you can look at this. Let's jump over to the S&P 500. So a lot of times on the first of the month, there is new money that is put to work, new strategies coming into the market, new 401k contributions coming in, etc. So a lot of times I look for that to be a very strong day, especially with the S&P 500 finishing down about 1.5% yesterday. If you want to look at this negatively, we didn't get much of a bounce. We only finished up 0.28% after a 1.5% blitz by the bears. So with that respect, you could say, hey, this is not really all that great. On the other hand, what you can say is, hey, we got the pullback, we undercut the 10-day EMA, and also On the hourly chart, we retested this weekly value area high, and we did so successfully. So we tested that 4505 spot 75 level. We actually undercut it a little bit. Typically that's what happens. Like, pretty sure these algos, they know there's a ton of stops like right below the level, so they tend to undercut it. And then we just had a nice bounce into the end of the day. So you could say, hey, the market was very overbought. Now we had essentially a 3-day breather. The 20-day moving average is closer to price. It'll catch up eventually. You know, maybe now we're just setting up for higher prices. That is the really bullish take. The more bearish way to look at this is, hey, we barely even had a bounce. And most of the players that transacted this week are now underwater. And you can see that based off the fact that for the upcoming week, we're going to be trading inside of this new weekly value area. And we're much closer to the bottom of it than we are the top. So yeah, interesting. Like, we had a divergence in volatility, divergence in the sectors, and then sort of like a mixed tape that you can interpret any way that you want. Let's take a look here. We had the VIX, yeah, it got crushed again, down 4.52%. So the VIX, it got very oversold. Then we have this little bounce, but it's not like, oh, and now we're just like racing back up to where we were. We're having some back and forth action. All right, let's take a look here at my trades for today. Let's pull these up. Just give me one sec. Okay. So this is what I did today. So I noticed some of those divergences pretty early on in the morning. And what I try to do is, like, I try to follow my trend model as best I can, follow my dark pool process, but I don't want to be dogmatic. My trend model's at a -1, but hey, I already had some shorts on the books. So I had this UVXY on, and given some of the divergences and that volatility was kind of coming off, I decided to close that position out. So I closed out for $13.13. I had paid $12.55 for that. And then I added one long position. I added a pretty small trade here, I must say. It's a one-star trade. The solar names are completely bucking the trend of market weakness. Would like to continue to build out a position in this group. Getting my first piece on now. So yeah, this is definitely something I would like to build out. But I did add a starter position in Sedge. The solar group is just incredibly strong. Sedge, it was trading above this monthly value area. It did not have a strong close. You can see a long upper wick here. We'll have to see. This, I really like the overall pattern that this is putting in. And if we break above that monthly value area, I'll go ahead and add to that position. And then UVXY, of course, I closed out. Let's take a quick look. We will check out our options order flow for today. And we have to look at this first. So I can't stress this enough. On days when the market is a little bit on the slower side, and on days where the relative volume is very low, where I notice a lot of traders get tripped up, is there every single like 10 minutes spike in price action or decline in price action. Even if you're a swing trader, you're taking your cues off of like 5 minutes of price action. And when the relative volume is very low, meaning there's not a ton of players transacting, what tends to happen is these algos take over. And basically what they'll do, let's say if the market is going to close down 0.2%, the day will typically unfold like this. The market gaps up 0.3%. Then the market declines intraday. Now it's basically flat. Then it bounces up 0.4%. Then it goes negative. Then it goes down 0.3%. Then it finishes, and you basically go like up, down, and all around until you hit your final destination. So if you are a swing trader, what matters the most really is the close. Like, how is the market closing? What does the weekly close look like? You can save yourself a lot of headache if you say, hey, the volume is pretty low. We had a very small overnight range in the market. There's not much going on. It is a Friday. So you really do yourself a big favor when you go, hey, the intraday action, I'm going to take it for what it is, but I'm going to make sure that I'm getting away from the desk and I'm not just staring at the price moving, because it really is not, I would say it doesn't really lend itself to good long-term performance. Like, if you're trying to swing trade or do things on like weekly time frame, monthly time frame, quarterly time frame, and you're absorbing like all of that information, it becomes sort of like sensory overload. But let's take a look at the bigger picture. And of course, we're going to take a much deeper look at this. There's a lot of work for me to do this weekend. I'm going to be putting out my weekend market analysis video for all Pristine Capital members. I'm going to be putting out my weekend watch list video. I must say, there's a lot of stocks that now that they've had their pullback, they're pulling back to these really logical levels. So there's going to be a lot to go through this weekend. I'm actually pretty pumped to do it. But take a look here. So this was, oh wait, this is the monthly chart. This is not the weekly chart. Take a look at this. So here's what happened this week. So overall, when you look at this picture, we had 2 weeks of really bullish trade. And then this week, really nothing happened. We pretty much put in a doji, very tiny green candle. So yeah, we sort of had this consolidation in the market. And everyone that bought up here, like 46.31, as of right now, they are underwater. So more to come on that for this weekend. But let's take a quick look at the options order flow. Let's go to our big tech options race. We're actually making pretty good time today, only 11 minutes in. Well, let's take a look. Did Tesla have like 5 billion of call flow? Let's check it out. And you can see we had, it doesn't really look like that much. We had about 1.8 billion, about 2 billion in call flow. That about does it for this market recap video. Almost lost my train of thought there. Hope you all have an awesome weekend. I'll see you all on Monday. If not, you will get the weekend videos in your inbox by Sunday. All right, thanks everyone. Have a good weekend.